What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Nvidia Corporation, ticker symbol NVDA. This is on the heels of the company reporting their Q2 earnings yesterday's. My apologies, I didn't get out videos yesterday. We'll be getting to all of those companies over the next couple of days. We'll start with Nvidia as they came out with their earnings. As we know, Nvidia just a few weeks ago actually pre-announced their earnings. So we actually had a general idea where this company was going to come in terms of their revenue, in terms of their profits. We knew it was just going to be a complete disaster, especially on that gaming side. We also got Q3 outlook. We'll talk about that as well. Talk about some of the analyst reaction to these earnings and this guidance. We'll take a look at some of the updated analyst estimates in terms of revenue estimates and earnings estimates for Nvidia over the next couple of quarters. We'll dive into the numbers. We'll take a look at the revenues, the profits. We'll see how so bad this is. Really bad. We're not going to sugarcoat it. This is really bad from a financial perspective. And then we'll talk about this from a technical perspective because there's kind of a divergence, I think, a little bit when it comes to those two things. Now, over the last year, stock's down 18%, which is really not that bad, but year to date, really underperformed, down over 41%. Those Q2 earnings came out $6.7 billion. Again, this was mainly pre-announced. We already knew these numbers in line with the estimates that were brought in tremendously. Now, we got Q3 outlook, and this is where we're starting to see the problems and really a lot of the cracks in Nvidia's business start to materialize. They're expecting revenue in the upcoming quarter to be just $5.9 billion. Folks, Wall Street was expecting $6.9 billion. So they're guiding $1 billion underneath where Wall Street was expecting for Q3. That is an absolute, like Intel-like, complete and utter disaster. Now, in terms of the analyst community out there and people that are kind of projecting forward with Nvidia, I think the consensus right now with Nvidia is that, look, the demand has really fallen off a cliff when it comes to the gaming chips, when it comes to actually using them to actual game, but also using them to mine cryptocurrency as well. As we know, those big ASIC miners and things people were building to mine cryptocurrencies, well, a lot of those have already been built, and so a lot of the demand is starting to flush out of the system from both a gaming perspective and a crypto mining perspective. And we see here, boy, on those gaming revenues, just $2 billion in the most recent quarter. Just a quarter ago, we're not even talking about last year, just a quarter ago, they were at $3.6 billion. A year ago, you were over $3 billion. We haven't been under $3 billion since Q1 of 2022, and we haven't been around $2 billion in basically 2 years over at Nvidia on that gaming side. Now, luckily for Nvidia, data center holding up quite nicely. $3.8 billion worth of revenue there, 3.75 in the previous quarter. In the year ago period, you were at 2.3. So as long as Nvidia can maintain that data center growth, this stock should hold up somewhat well. But again, the analyst community is kind of lining up and basically saying that they're not expecting a V-shaped recovery coming with Nvidia. What a V-shaped recovery would be is essentially taking these gaming revenues and in a quarter of two, re-accelerating back to 3.5, maybe close to $4 billion worth of revenue. And then maybe the data center continue the kind of explosive growth. I think what analysts are anticipating is a very much flattening of the growth rate when it comes to Nvidia. We certainly got estimates when it comes to that upcoming quarter. Analysts still haven't brought in their estimates enough with Nvidia. I talked about Q3. We're expecting $5.9 billion from Nvidia. That's out of Nvidia's mouth. You see here on Wall Street, the low end estimate was actually right at 5.9, and the high end estimate was over $8 billion. Obviously, Nvidia not going to come anywhere close to that. This midpoint guidance is going to have to come down tremendously over the next couple of weeks and months. And so what does that do? Okay, first of all, you're looking at negative growth at Nvidia for the upcoming quarter. We're anticipating negative growth for the subsequent 2 quarters. But folks, Wall Street hasn't brought these expectations down either as well. Q4 is not going to come in at 6.8 billion. Q1 of next year, which is actually fiscal 24 year for Nvidia. It's a little confusing. I don't know why I've got an automatic refresh on this page, but look, Q1 is not going to be $7.4 billion. And I think there's going to be a lot of people questioning, is Nvidia going to be able to reaccelerate? This would essentially be Q2 of next year Are they going to be able to reaccelerate to 17% growth? And then look at where Wall Street has this company growing in the back half of next year. 30% growth rate for Nvidia. I think that is not going to happen with Nvidia. All of these estimates are going to have to be reined in over at Nvidia. Now, let's take a look at the financials. We have that disastrous $6.7 billion worth of revenue. Talked about how that was up fractionally year over year by about 3%. It was in line with estimates, but again, those estimates had been reined in so much after this company kind of pre-announced their earnings that it's a little bit misleading. These are way underneath expectations for Nvidia. Now, cost of revenue skyrocketed. Look at this. Your revenue went from just 6.5 billion up to this 6.7 billion. Look at your total cost of revenue. Went from 2.3 all the way up to 3.7. I dug into the commentary a little bit. Obviously, with the weakening of demand that they're seeing with their gaming chips, they've had to pay some kind of penalties to a lot of their suppliers like TSM, where they have guaranteed kind of slots to manufacture. Well, they've had to pull those off the table. They have to pay some early penalties. They've had to write down inventory. It's just a disaster. Look what that did to your gross profit. So despite marginally increasing the revenues, look at your gross profit went from 4.2 all the way down to 2.9. This is a disaster. Operating expenses went from 1.2 up to 1.8. Don't got a problem with that. This company, in order to reaccelerate towards the back half of next year to a 30% grower, again, a little bit easier comps. All of these revenue numbers are going to be a little easier to jump over if you're Nvidia, but you still got to invest in this business. So I don't mind the R&D spend. And look, this company is still profitable, but it's just marginally now. Look at your total operating expenses. They went from we'll call that 1.8 billion last year to up to 2.4 billion. You take 2.9 billion, you minus off 2.4 billion, and you get just $500 million worth of operating income in the quarter. And folks, this is probably what it's going to be for the next 12 months. Over at Nvidia, you went from $2.4 billion worth of income from operations all the way down to 500 million. This is basically a break-even business from an operating perspective. And look, if this company had a 100 billion or a $200 billion valuation, probably wouldn't necessarily be a problem. I want to remind you, this company has a $431 billion valuation. Its core business, these gaming chips, demand for those have completely fallen off the table. Our gross margins are shrinking. Our income from operations shrinking. There is no company on the planet that deserves a $400 billion valuation with declining revenues and shrinking margins and shrinking operating income. So you just have to judge that for what you will when it comes to Nvidia. Now, this can create a great buying opportunity. If you believe this company can reaccelerate its revenue growth towards the back half of next year and into next, well, look, over the next 12 months, you probably want to accumulate this stock, but there's so much risk. If they don't reaccelerate these revenues, reaccelerate the gross profits, this company is, I mean, we're talking about overvalued to a degree that it's hard to see in the market. Certainly, some people would argue this with Amazon, maybe even like a Tesla, but even those companies, particularly Tesla, has not seen this type of revenue contraction and gross margin contraction in its company's business. Now, there is some margin of safety when it comes to Nvidia, when it comes to their balance sheet. They've got plenty of cash, over $17 billion in cash. This includes the fact that they had to pay that breakup fee. This company was trying to acquire ARM Holdings company, which would have completely we'd have to be having a completely different conversation with this company if they were able to complete that acquisition. That was like a $50 billion valuation business that they were trying to buy. Well, they had to pay like a $1.5 billion breakup fee. That's where some of this cash went. We have inventory stacking up. Not as bad as I thought, but boy, you went from 2.6 billion up to about $3.9 billion worth of inventory. They're having to write down the value of that inventory as the pricing on their GPUs in particularly shrinking very quickly in the marketplace. Now, company does have about $9.7 billion worth of long-term debt. Total liabilities coming in at 19.6. So the company has over $17 billion in cash, another $5 billion in receivables. Even if you write down this inventory quite a bit, you're at $2.5-3 billion worth of inventory. You've got plenty of leeway with this company. This company could run from a break-even operating perspective, or just kind of a marginal gain, or maybe even lose money from an operating perspective, it wouldn't be a problem from a balance sheet and a financing perspective. Very financially healthy company. Now, from a cash flow perspective, because look, sometimes when a company's gross margins and their net income, we see here for the net income over the last 3 months, it shriveled to $656 million. Folks, last year we were at $2.4 billion. That is completely falling off the map. Well, sometimes it paints a different picture when you get to cash flow. Well, unfortunately, with Nvidia, it doesn't. You come down here to net cash provided by their operating activities, it went from 2.7 all the way down to $1.3 billion. Now, one thing that Nvidia is doing that I actually like is they're actually buying back the stock. $3.3 billion worth of shares in the most recent quarter. Over the last 6 months, they've bought back $5.3 billion. Nvidia, if they have confidence that they're going to be able to reaccelerate this revenue growth, reaccelerate this earnings growth towards the back half of next year into 2024. Again, I think over the next 12 months, and I'm basically agreeing with analysts, is there's not going to be a V-shaped recovery. Sure, if crypto triples in value over the next 6 months, that's something that could be a catalyst to spur this V-shaped recovery. I don't think that's going to happen. So you are starting to look out basically 12 months into the future, at least. It might be as long as 18 months, maybe even 24 months until Nvidia starts producing positive earnings, and especially earnings growth that warrants a stock that has a forward PE. I mean, it's not even close. This forward PE is probably closer to 100 now on this one, as these forward earnings estimates are going to have to come in big time on all the subsequent quarters. You've got a price to sales ratio on this one that is just astronomical. This stock has to re-accelerate its revenue, and if Nvidia believes that, and if you out there watching this video believe that, well, you should be buying the stock. And that's what Nvidia is doing. They're buying back the shares, again, to the tune of $3.3 billion. They burned through about $874 million, again, on depreciating operating activity cash, and the fact that you bought back those shares to the tune of $3.3 billion. That's where most of this cash burn happened at this company. Again, you had that breakup fee occur in the first quarter as well for Nvidia. Now, from a technical perspective, those of you that tune into our Friday show, every Friday we recap all the major news from all the FANG stocks, including Nvidia, and you'll know I've had this green box marked out. I mean, this is for months, okay? I mean, we're talking months at Nvidia, basically all year. We've been looking between 115 up to about 160. Pretty large range on this one, and anytime it's popped into this green box, it has been a buying opportunity. Again, that is from a technical perspective, and just me personally, I'm going to just speak to you as myself looking at this stock. I do not buy stocks that have negative earnings growth projected this far out into the future. And again, these analyst estimates are not accurate. Okay, we're just getting these news now from Nvidia. So you're talking about 2 weeks, 3 weeks, 4 weeks. We'll want to come back and revisit this, and we'll do this on our Friday show where we touch on Nvidia, and I have timestamps in those videos. So if you just want to come check on Nvidia, you're more than welcome to, and it'll be just 5 or 6 minutes of your time. In a week or so, we'll come and revisit where Wall Street has this one going into the future. But me personally, I don't buy stocks that have that kind of negative earnings growth projected from a long-term perspective. There's just too much uncertainty, and if they don't re-accelerate those revenues, well, the multiple has to come way, way down. Okay, we've seen that with Meta, we've seen that with Intel, we've seen that with a number of different stocks, some in Nvidia's industry, some not, where if you all of a sudden don't grow anymore, the multiple has to contract. And I'm gonna wait until Nvidia proves that it could re-accelerate that multiple at some time. But this thing should, I think, from a technical perspective, trade pretty predictably, meaning you can make money in the shorter term. So from the longer term investors, look, you've got your own outlook on this one. I can't really help you there. It's not a stock I would buy for the long term right this second. Maybe 12 months from now, maybe 6 months from now, maybe 24 months from now, we start having the conversation. We're buying a $400 billion company with declining revenue revenues, declining gross profits, declining cash flows for the long term. Look, I can't make that argument now, but I can make the argument when we pull back. I think we're going to go sideways with this stock. That's probably the best case scenario. You've got an area down here at about 145, 150, where this stock from a technical perspective should bounce. Look, I have a long-term portfolio and then I have a tactical trading portfolio, and both I have a lot of success in. But from the tactical side, I would buy this one in the 140, 150. I would have a stop loss very close underneath that, probably like at 140. I'd probably risk $5 to $10 with the upside that you bounce from 140 back up into the 170s, 180s. You set a trailing stop. You start getting out of this one as it gets to the middle of this range. Maybe you push it all the way to the top up to about 190, 200, but you should meet some resistance here. I think you sideways consolidate on Nvidia. I think initially that sideways consolidation might be between 150 and 190. If things really get hairy over at Nvidia and the markets in general, I think the bottom of this range could be 115 up to this 145. That's why I'd have these stop losses on these shorter term trades. Right now, Nvidia is just a short-term stock in my perspective. I repeat, and this is just my own investing philosophy, I don't invest in companies that have negative earnings growth and that have a massive, I mean, we're talking about a massive price to earnings on this one. This is not even close to being accurate, and a massive price to sales. It just doesn't work out. Could it work out with Nvidia? Yes, maybe, but the track record with these types of stocks is they just continue to head down until they can prove to investors that they can turn it around and we start to see positive momentum. That is when we will recommend Nvidia from a longer term perspective. But I think I agree with the analysts. You're not going to see a V-shaped recovery. You're going to be able to very well telegraph the demand coming back for the different business segments that Nvidia has. And so you're going to be able to jump on that long train at some point. I think it's too risky at the current time, but there's certainly some ways to make money on this one from a technical bounce and trading perspective. Hopefully you guys enjoyed today's video. We'll have Salesforce, Snowflake, and a few others heading into the end of the week. And of course, we'll join you tomorrow for our Fang Stock Recap show where we'll talk about Nvidia more in depth. Hopefully you guys have a great day out there. Good luck with your investments.